Hello and welcome to this recording which will look at the production of absorption costing statements. Absorption costing statements are required for financial reporting purposes and they will be prepared for a period of time, for example a month, a quarter, 6 monthly or annual basis. The typical layout of an absorption costing statement can be as we see here. We have the sales revenue, then we have the cost of sales. In order to arrive at the cost of sales, we need to consider any opening stock of products, the production cost, and any closing stock. And the cost of sales calculation is opening stock plus production minus the closing stock. And that gives us the cost of sales. Sales minus cost of sales will give us a profit figure, but we need to remember to adjust for any over or under absorption of overheads. This can arise because in the cost of sales calculation, the costs that we are considering will be the material costs, the labour costs and the overheads absorbed using overhead absorption rates. So because those overhead absorption rates are calculated using budgeted figures, we may well come across an under or over absorption. So we're going to look at an example. In this particular example, we're going to do two absorption costing statements. The first one is on the assumption that 11,000 units were produced and sold. So there's going to be no closing stock. Then we're going to produce an absorption costing statement on the basis of 11,000 units sold. 11,000 units produced, but 9,000 sold. So there is a closing stock. And we'll see what difference that makes to our absorption costing statement. Now the first thing to do is to look at the production cost. So how much is it costing to produce 1 unit? So we're using absorption costing. So the production cost will consist of the material cost, which we're told is £5, the labour cost, which we are told is £3, the variable overhead, which we are told is £2. A variable overhead is another direct cost. So if we add these, we have the prime cost of £10. Then we add the production overhead, which is using the overhead absorption rate. Now before we fill that figure in, let's have a look at calculating the overhead absorption rate. We're told that fixed overheads are expected, so budgeted, to total £10,000. So we need to divide that then by level of activity. If we look at the fixed overhead figure that we have here, we can see this £2 per hour. So this is the overhead absorption rate, but I just want to illustrate how it has been calculated. As it's per hour, we're looking at labour hours. Now we produce 10,000 units. each unit takes 30 minutes. So 10,000 units at 30 minutes a unit is 5,000 hours. So our overhead absorption rate, £10,000 divided by 5,000, and that's where the £2 per labour hour figure comes from. So that was given to us in this example, but it's useful to be able to see how it was calculated. So our overhead absorption rate is £2 per labour hour, and we know that a unit takes 30 minutes, so half a labour hour. So £2 per hour times half an hour gives us £1. So our production cost, £11. Now that we know our production cost, we can go on and produce the absorption costing statement. So we generally have two columns. First thing that we have in the statement is the sales revenue. And we can see we're selling for £15. Now we're told 11,000 units were produced and sold. So we've sold 11,000 units at £15. That gives us a revenue of £165,000. Then we need the cost of sales. So there is the opening stock, and there is no opening stock in this question. Then we add production. We're told that 11,000 units were produced and sold. So we've produced 11,000 units, and we've already worked out the production cost of £11. So production is 11,000 times 11. Now because we have produced 11,000 and we've sold 11,000, there is no closing stock. So the cost of sales figure is the opening stock of 0 plus the production of 121,000 minus the closing stock, which gives us £121,000. So if we deduct that from the sales figure, we have £44,000. This is not our final profit. We need to see whether there is any adjustment for under or over absorption. So we know that our overhead absorption rate is £2 per labour hour. Our overhead absorption rate, £2 per labour hour. To work out the overhead absorbed, we multiply the overhead absorption rate by the actual activity. So £2 per labour hour times the actual labour hours worked. So if we go back to the example, They haven't told us how many labour hours were worked, but they have told us that we produced 11,000 units. And we do know that each unit takes half an hour or 30 minutes. So for 11,000 units at 30 minutes a unit, that would be 5,500 hours. So that was 11,000 units, each one taking half an hour. So we have absorbed £11,000 in overheads. So how does that compare with what the overheads actually were? Have we been given that information? We have, at the end of the period, fixed overheads actually totalled 10,500. So we have over absorbed by £500. So we put an adjustment at the bottom of our statement, over absorption, £500. So that is the £11,000 that we've absorbed minus 10,500, which was the actual overheads. We add an overabsorption, so the final profit figure, £44,500. And that is our absorption costing statement with no closing stock. Second requirement in this example is to produce another absorption costing statement, this time on the assumption that we produced 11,000 units, but we only sold 9,000. So we've got a closing stock of 2,000 units. So the information that we use is the same. We know our production cost is £11. We know we're selling the product for 15. So we'll now look at producing this second absorption costing statement. So as before, we start off with the sales revenue. Now we only sold 9,000. And the selling price was £15. We then deduct our cost of sales. The calculation for cost of sales is opening stock plus the production minus closing stock. Well, there is no opening stock. Production, we produced 11,000. And we've already worked out the production cost. Our calculation up here, production cost £11 a unit. So that's 11,000 times £11. In this example, we now have a closing stock because we've produced 11,000 units, we've sold 9,000, so we've got 2,000 left. So they're still in the warehouse, they're stock. So those 2,000 units of closing stock are also valued at the production cost. So the closing stock, 2,000 units at £11. That gives us 22,000. Cost of sales calculation, opening stock, add on the production, take away the closing stock, and we are left with £99,000. So deduct that from our sales figure, leaves us with £36,000. But again, that is not our final profit. We need to see if there was any under or over absorption. So, as we did before, we have produced 11,000 units. That will have taken us 5,500 hours. So the overhead absorbed is the overhead absorption rate of £2 an hour times 5,500 hours, which is £11,000. We were told the actual overheads were 10,500. So we have an over absorption of £500. So this is exactly the same as in the previous statement. When we had no stock, we still had an over absorption of £500. This is because in both these statements our production has been for the same amount, 11,000 units, and our overheads absorbed are based on our production. So we have an over absorption. So we add over absorptions and we have a final profit figure of £36,500. If there was an under absorption, it would be deducted. So there's the absorption costing statement. So the layout is quite important. It is always your sales revenue, then you deduct the cost of your sales, then make an adjustment for over or under absorption, and that will give you the profit figure. To arrive at the cost of sales, it is opening stock plus the production cost minus closing stock. And the production cost will be made up of the direct material, the direct labour, any direct expenses or variable overheads, plus the overheads absorbed using the overhead absorption rate. So that brings us to the end of this recording about the production of absorption costing statements.